that much money and the rest of the economy maybe not being included, you start having these fights between professionalism and populism. Okay, so that's where the problem starts coming from. Where you, Vernon, who's feeling like you're outside the system, now go to the ballot, you vent your frustration, and you vote in a populist who's going to promise to give you everything because you're frustrated that the professionals give you nothing but excuses and stories. And this is what professionals have to stop doing. Professionals, unfortunately, in Zambia have to. The professionals have to stop now getting down to this thing of giving people stories and explanations and theses when the people are busy asking for results. This is where the problem starts to happen for many of them. And this thing of bank profits being high while capital access is still constrained, while interest rates are still sitting in the 20s and interest rates are still sitting in the 30s, and we haven't seen enough capital get deployed out, will be an issue. Now, yes, it's good to see that mortgages doubled, in fact, tripled in the last year. It's good to see that business loans to manufacturing and business loans to mining have all gone out, but a lot of that is still sitting at the top. So credit expansion needs to be very carefully monitored and to make sure that as much incentives are given to the banking sector to get loans to the bottom. Yes, we keep seeing a lot of handshakes. We keep seeing a lot of activities happening. We keep seeing a lot of this and that, but we're not seeing enough of the actual results happening at the bottom of the economy. So we need to make sure that our SMEs are at optimism level, and we're actually seeing that as many of our businesses are creating work for creating work for our citizenry. So what we want to try and avoid is the bottom of the economy now becoming populist because the professionals are failing to answer the questions of the people using the professional techniques, and banking profits being so disconnected from the reality of a lot of people's lives might be a big issue that we have to start addressing. Now, maybe this is why the central bank has actually decided to act and decided to step in and say, look, we're going to try and rein in some of this activity because it's now affecting the population. The reason I say this, for the reason I'm focusing on this point, is because if you're going to have banking sector profits rising, you should have real wages rising. So last year in Zambia, real wages moved up by 0%. Okay, the purchasing power of a salary moved up 0% last year. However, the bank's profits moved up 10% and have stayed elevated. And the revenue that they're generating from areas such as bond trading is then alarming to a lot of people. So, should you have the real wages of a country sitting so still while the banking profits are still getting stronger and stronger? The average salary of a person grew by 9.8%, while inflation grew by 9%. So that is what I mean when I say that real wages did not grow at all last year, and that's part of the struggle that everyone's having. The third question, which we want to try and maybe have to the central bank, is non-performing loans at record lows. Now, non-performing loans for the first time are recorded as at the lowest they've ever been, as far as we've been taking records, as far back as 2006. And it's common knowledge that in 2021 you had a bunch of government contractors who were given government securities in order to make sure that they could continue supplying the economy. Okay, they were given government securities to make sure that at a time they were under financial stress. And a lot of these were fuel and fertilizer. A lot of these were fuel and fertilizer suppliers, especially during election time. And as they were under financial stress, they were given financial instruments, things that they could trade off should they need liquidity and at least some form of payment. Now, the government specifically gave out long-term bonds, your 90 billion, your 15-year bonds, your 15-year bonds, your 10-year bonds, your 7-year bonds, but really your 10 and your 15-year bonds were the ones issued out to a lot of these people under private placement. Now, as a remedial measure, that was actually put out. Now, especially during it was a time when there was fiscal constraint. Now, however, at a time when we saw the non-performing loans drastically drop, The question then about non-performing loans sitting at 5%, is that a sign of a better performing economy where people are now able to service loans, or is it a sign of a bailout? Because this is also what people are questioning in America. When bank balance sheets were sitting so strong in the recent stress test, is it a result of a better economy, or is it a result that the Federal Reserve in America stepped in, bought off a bunch of toxic credit, which was packaged into bad financial instruments, and it's now sitting on the balance sheet of the central bank in America, as opposed to on the balance sheet of the banks who are looking healthy and don't have to hold those toxic loans? So effectively, if I go in and I give a person who has supplied fertilizer a 10-year government bond or a set of 10-year government bonds and tell them, look, you can cash this in if you want, go to your bank and cash this in if you want, or you can hold on to it and get paid later. Now this fertilizer supplier decides, I need the cash, sells it to the bank. So the bank no longer has a non-performing loan. His loan is gone. They have transferred that loan into a government bond, okay, which is seen as close to cash. It's seen as secure. So this improved the bank balance sheets by transitioning the 5 billion kwacha of non-performing loans into a couple of extra billion kwacha of government securities, which have now started to look stronger and stronger. Okay, so how much of NPLs in 2021 coming down and NPL sitting at record lows in 2022, how much does it have to do with the government contractors liquidating, or is there strength in the lending industry? And does the 5% speak to an improvement, or is it just a result of a bank bailout? Because effectively, when you start giving contractors government securities that they liquidate, and then the government and the banks start holding government bonds, that, my friend, is the definition of a bank bailout. Okay, because the banks were holding these toxic positions which could have run them down, and now the government basically gave them government securities which now they can utilize and they can hold with definite cash flow holding to them. So that's a big concern. The question then is, what is driving the strength of lending? Because this is part of what the central bank's conversation should be about. Because is too much money going on? Are strong bank balance sheets the time to be tightening? Okay, or are the bank balance sheets strong because you made them strong? You and the treasury made them strong, and now you want to try and point them out and say, look, the balance sheets are strong, we can start to squeeze. Maybe these banks haven't tightened up yet. Maybe these banks haven't actually fixed what's going on yet. Now, finally, so the fourth question, which we would take into the central bank meeting, has to do with the forex rate. And we said that since the last meeting, we've seen the US dollar get 16% stronger, and the kwacha enter its second longest streak since 2000, since on record since 2006 of 92 consecutive days. Now, the longest streak is 20. The longest streak was in 2021, 2020 going into 2021, which ended in about May, June, where we had a 200-day streak of kwacha losing value against the dollar. So even with the central bank taking action now by selling dollars into the economy, the dollar is still gaining momentum. Okay, and now it has slowed down in its momentum slightly, but it is still getting stronger. So is it not time maybe to consider an alternative method of stabilizing currency? And when I'm talking about alternative method, I used to be, as I was a bond trader a while back, one of the things we also saw coming up was a forex derivative market. In other words, where people could buy and sell futures contracts for forex. And this could actually help stabilize the market. Now, the unfortunate thing with that was banks work very well when information is not perfect. This is the unfortunate thing. Our banking sector does very well when information is not perfect because those asymmetries in information allow them to make money. So let me give you a simple example. If you are trading maize, let's say you're a briefcase trader of maize, you know that the maize farmer is going to sell it to you at 100 kwacha a bag. And you know that the milling company wants to buy it at 160 kwacha a bag. And they don't know each other. The milling company doesn't know what the farmer is selling and what the farmer is selling at. And the farmer doesn't know what price the milling company is selling at. This is how briefcase traders generally work. They go in there, get the information from both sides, don't tell them a thing, and make the difference. So this is what we mean by asymmetric information that's benefiting banks. They know what the supply and the demand side for FX are. They know how the cash flows for FX are going to look, and they use that to their advantage in terms of their FX trading activity. So in the end of the game, if we don't know the future prices and the banks are now able to control that level of information, then they get to profit as much of it. So they are resistant to a lot of these innovations that can help currency markets become more open and transparent, because they don't make free profits off of it. And unfortunately, in this country, we've encouraged a lot of people to make free, cheap, and easy profits off of many things. So one of the things we need to start asking for is, should we not start having derivatives market for FX back? Should we not have the central bank support such activities so that we can have a much more open and much more stable environment? Because if we can have those futures contracts on dollars, in other words, somebody can say, look, I'm going to be selling dollars in 6 months, and this is the rate I'm going to be selling. Who'd like to buy this contract? And therefore, now a contract has been put together in 6 months' time or in 12 months' time. And therefore, the futures price is determined by the market and not determined by the people who are sitting in the back office of banks, okay, who can literally wind up somebody as easy as possible. Okay, so that's what you're trying to avoid. So you don't want futures contracts and forwards contracts sitting in the control of the bank, but you want those prices also market controlled. So you want the futures market not to be sitting in terms of the treasury deciding how strong it should be, but it should be sitting in the hands of the market operations to be able to see what prices should be prevailing. So previous attempts have been there. So should we not be moving towards a futures market regime? And should we this time not have banks become the ones who put spanners in the works there? So that's the fourth question I would ask. And finally, the fifth question I would actually have brought to the central bank is this to do with green lending, green energy lending. And so basically, our recent battle with load shedding showed that the electrical grid of this country is under stress, and that is a risk to economic growth. And also, if these businesses are not performing, they're not able to service their loans. So energy market data has shown that a lot of this was brought on by 50,000 households being connected to the grid annually, and the domestic sector contributing to 58% of the nation's domestic grid demand since 2014. So as a nation trying to export electricity and also trying to grow our mineral sector by threefold or fourfold, we need to try and find a way not to only build new power stations, but also to take as much of the domestic sector off the grid without compromising their ability to get electricity. However, we've talked about this before, that going off the grid will cost you anywhere from 60,000 kwacha to 120,000 kwacha, which then will require financing, because not many people have 60 to 120,000 kwacha just lying about doing nothing. So the question then is, what tools does the central bank have at its disposal, okay, so that it can go in there and ask, and maybe either encourage banks or drop rates? What does it have at its disposal to be able to get banks to finance at single-digit rates or even lower, at least single-digit rates or very low teens, the interest rates for somebody to be able to say, I want to take my house off the grid, for somebody to be able to get a 14%, 12%? What tools does the central bank have so that we can have a growth, we can have a sustainable economy which can grow without the risks of load shedding coming back and forth constantly? Because I don't see this load shedding being the end of the story, because we have grid stress. In as much as people say, no, it's got to do with Kariba and water, it's grid stress, okay? We have a stressed grid, and every time there's economic activity happening, we drain the water from that place. So if it slightly doesn't rain enough, then you start to see that it starts to affect our ability to generate electricity. And those people are 5 questions that I think should be asked at today's monetary policy meeting. And with that in mind, I think those are the main concerns that we're going to try and voice today. I don't know if we can finally have Vernon back and see if he has any thoughts before I give you my last words. I think we'll see if we'll have him back at another time. And I'll give you my last words regarding wealth management. And I think this has to do with just a few of the wealth trading issues. So yesterday, I was giving you your 5 levels of wealth, and I just wanted you to revise into that what your thought pattern was. I know a lot of people may not have picked that up, but yesterday I did give you what I call my 5 levels of wealth. And I'll just go through these one last time in terms of my wealth targets. Sorry about that. Let me just give you the correct one. I was giving you my 5 levels of wealth, what I call my 5 wealth targets. and what this means in terms of investing. What this means in terms of investing for your future. So I'd given you these 5 wealth targets in terms of financial stability, strategy, security, self-reliance, and self-determination, and how it goes from just having a budgetary surplus, being debt-free with the 6 month reserve, to having 5 million kwacha worth of financial assets that can generate 5 times your basic needs, giving you the ability to pursue your wants, dreams, and some of your aspirations. And just to warn everyone that, look, earning about 40,000 kwacha, 50,000 kwacha a month is already putting you in the top 0.5% of the economy in terms of earners. So that already gives you a breakdown of what we're looking at. And these were the numbers that people should have in terms of the amounts of money you should be investing on a monthly basis in kwacha if you want to attain security, reliance, and self-determination by age 60. And if you tell yourself you want to retire in 10 years, and that may not put you at age 60. So what you want to do is look for the number that is before that. Look for the number that is 10 years. So if you're saying 10 years, do you have the ability to invest as a 50-year-old? And this is assuming you start with zero. And if you look at also the recommended lump sums, this is in thousands of kwacha. These are the recommended lump sums that a person should be having in terms of the amount invested that they should be. Now, please take a snapshot of this. Take a look at it. Take a look at where you are. Now, I also wanted to now start going into issues pertaining to not just the wealth targets, but also to do with the wealth. I wanted to go into the wealth levels specifically to do with savings for children's education. Now, there are 4 levels of children's education that we should be looking at. So you should be using the markets to save up for your children's education. And the 4 levels we look at are what are called local diplomas, local degrees. So in other words, a diploma in a local college, which is 3 years and usually costs about 75,000 kwacha for 3 years diploma. For local degrees, 200,000 kwacha is what you should be looking to save up. This is the total cost of education. Regional degrees, 770,000 kwacha. That's what you should be saving up, including transport, boarding, logistics, everything, including the education. And a global degree, you should have about 2.2 million kwacha saved up. This will just get you just enough. This is where they stand in terms of if you want to send your child abroad to the US, the UK, generally there. Now, these are the savings rates. These are the savings rates that a parent should have. So here they are. These are the amounts of money that parents should be saving and investing on a monthly basis in kwacha in order to be able to reach these targets. So as you can see, the blue one, that's your local diploma. As you can see, when your child is born, that's 165 kwacha per month. If you want to try and get to a local degree, we're now looking at about 441 kwacha per month. You should be saving from the time your child is born. If you want to try and send them regionally, you should be investing 1,698 kwacha per month if you want to take them regional. If you want to take them global, you should be saving 4,852 kwacha per month. This is from the day they're born all the way up to the age of 20. And if you see, if you start them at age 4, then we're looking at 237 kwacha for a local diploma in terms of saving and investing per month. By the way, these are recommended monthly investments to target each type of education for a child. Recommended. Okay, I'm gonna say that again. It's not a promise. It's a recommendation based on our mathematics and our understanding of how the markets work. Now, 632 kwacha will probably get you towards a local degree. 2,433 kwacha saved and invested every month from age 4 to 20 will probably get you to a regional degree, and 6,952 kwacha saved and invested in financial instruments is what you can use to target a global degree. And if you get to age 8, it's 361. 962 for local degree, 3,703 for regional degree, and 10,580 for global degree. And if you now start getting to age 12, 615, 163, you can see these numbers are picking up. Obviously, the closer you get. And if you start when your child is 16 and you're saying, look, in the next 4 years, I need to save for their education. Well, the question is, can you save while still saving for your retirement, by the way, because don't sacrifice your retirement and become their tax. Can you save 1,391 for a local diploma, 3,709 for a local degree, 14,279 for a regional degree, and 40,000 kwacha per month for a global degree. This is what you need to start looking at in terms of the amount. Now, if you're looking at lump sums where you just want to deposit money and leave it, you should be looking at having 23,000 kwacha from the day your child is born for a local diploma. From the day they're 4, 30,000 kwacha 37,000 kwacha at age 8, 47,000 kwacha at age 12, and 16,000 and 59,000 kwacha by age 16 in order to be able to cover them getting a local diploma. If you want to cover a local degree, you need to put 62,000 kwacha into your investment accounts for them by the time they're born, 79,000 kwacha by the time they're 4, 99,000 kwacha by the time they're 8, 125,000 kwacha by the time they're 12. And then if you're looking at regional degrees, by the time they're born, you should have 240,000 kwacha put into an account ready for them, into your investment account. When I say an account, I'm talking about, have you invested it in stocks, bonds, unit trusts? Have you put it somewhere there? My advice to most people, by the way, fixed income, unit trust, and bonds are your friend when saving for your child's education. You don't want any risk attached to it. 303,000 kwacha for a regional degree by age 4. 383,000 kwacha invested into an account for a regional degree starting age 8. Starting age 12, 483,000 kwacha. And starting age 16, 610,000 kwacha. And if you want to send your child global, by the time they're born, you should have 686,000 kwacha sitting in an account, 866,000 kwacha sitting in an account for age 4, 1.193,000 kwacha at age 8, and 12,000 and by age 12, 1.3 million and 1.7 million sitting in an account by age 16. These are some of the math that we have. Now, these are not guarantees. These are recommendations that you have when sitting with an advisor such as myself whenever you're trying to do child education savings. This is the data from what we have now. As I said, we have lost Vernon for the moment, but we wish you all a wonderful day. God bless to as many of you. And we will see you tomorrow when we give you the roundup of what has happened from the central bank meeting. Good day.